Hi, how are you everyone? I hope you are doing good. So today we are here to talk and discuss about the topic residential status. This is a part of the Income Tax Act. So here we look forward to it. So before we go to anything, there must be a question in everybody's mind that why residential status is so important. Residential status is important because depending upon this, the incidence of tax can be calculated. See, for an example, some people might be living outside India and their source of income might arise outside India. Now they will have a question in their mind whether they have to pay tax in India or not. So once there is a question which arises that being a citizen or not being a citizen, whether you have to pay a tax totally depends upon the residential status. Similarly, if a person who is a foreign national and he comes to India and he does a sort of business or anything from where he generates income, now the question also rises whether that person will also have to pay tax in India. And for this reason, residential status plays a most important role because it is due to the residential status, the government will find out whether the tax liability is in front of the Indian government or will be in front of different under government. So for this reason, residential status is very important. Now, the next thing, the taxable entity. Now, who can be a taxable entity? Can only an individual be a taxable entity? No. Other than individual, a Hindu undivided family, a firm, an association of persons. An association of person means cooperative societies or different under association or institution which people may run. Okay, so this comes under the an association of persons. Joint stock companies or any other person may be liable to pay tax in India. Okay, and for this reason, residential status is very important. Now, now generally, if we deal with the residential status for an individual is divided under three categories. One is the resident, and under resident we have two categories. We have the ordinary and the non-ordinary resident, and the second category is the non-resident. Okay. Now, people who generally falls under this category, under the resident category, will have to pay tax, and people who are non-residents, generally they do not have to pay any tax. Okay. Okay. Now, important consideration. Residential status for each previous. So what is the important consideration? Residential status for each previous year. Residential status of an assessee is to be determined in respect of each previous year, as it may vary from previous year to previous year. So while determining the tax, whether he has to pay a tax or not, the main thing depends is the residential status in the previous year. Now, which is the previous year? The previous year is the year just before the assessment year. Now, let's take an example. We are in the year 2020. So, the assessment year will be 2020, 2021. But the previous year will be 2019, 2020. Previous year is generally the year in which the exam generates. Okay. So different residential status for different assessment year, and assessee may enjoy different residential status for different assessment year. Resident in India and abroad is not necessary that a person who is a resident in India cannot become resident in any other country for the same assessment year. So he may become the resident of different other country also, but that doesn't mean that his liability of paying tax in India will reduce or will be declined. Now, how to determine the residential status of an individual? So if we look thoroughly under section 6 subsection 1 of the Income Tax Act, it clearly defines that the section applies to individuals. This is for person who are individual. It does not apply to any organization or any Hindu undivided family firms or any joint stock ventures, nothing. So it qualifies for an individual. Now he has to fulfill one of the two, minimum one of the two basic conditions. Now what is that? He is in the India in the previous year for a period of 182 days or more. This is the first condition. So if the person is liable to pay tax in India, has to live in the previous year for at least 182 days or more. And the second basic condition is that if he fails to meet the first condition, which is given 182 days, then the second condition follows. Now what is the second condition? He is in India for a period of 60 days or more during the previous year and 365 days or more during 4 years immediately preceding the previous year. Now, if he fails the first basic condition, now the authorities may jump to check his eligibility of paying tax through this second condition. Now, what does the second condition speak? The second condition speaks that the person, if not qualifying the 182 days, should qualify at least 60 days in the previous year. So now, if we talk that the previous year is 2019-20, so that means in the year 2090, okay, that is from 1st April 2019 to 30 March 2020, he should live for at least 60 days. Now 60 days can be in any fragmented ways. It may be 10 days in May, 20 days in June, 1 day in December, 10 days in January. So it can be in any fragmented days. 60 days is not in a stress, okay? So he have to live in India for at least 60 days or more during the previous year, at least 60 days, and more will be more than enough, and 365 days or more during the 4 years immediately preceding the previous year. So in point number 2, we have two conditions. One is that in the previous year, he should be a resident in India for at least 60 days or more. And immediately preceding the previous year, that means here immediately preceding the previous year means the 4 years, which is 2018, 17, 16, and 15. So from 2015 to 2018, that person must be in India for at least 365 days. And here also 365 days means not at a stress, but it can be in any fragmented days. One may be a resident for, suppose in 2050, he may live in India for 200 days. Now in 2018, he may live for 100 days. And in 2080, he may live for 65 days. So he may skip 2017. He did not live in India for 2017. So even though it may qualify. Next, what are the exceptions? Now there are some exceptions where the two conditions doesn't meet. Now, what are the conditions? An Indian citizen who lives in India during the previous year for the purpose of taking employment outside India. So such and such person who lives for India in the previous year and goes to another country for an employment. So there the 182 days doesn't meet. Next, an Indian citizen leaving India during the previous year as a member of the crew of an Indian ship. So any person who is directly or indirectly connected with the crew of Indian ship, so even his residence is not taken into consideration. Next, an Indian citizen or a person of Indian origin who comes or visit India during the previous year. Okay, a person is said to be an Indian origin if either he or any of his parents or any of his grandparents were born in undivided India. So these are the three exceptions where the point 1 or point 2 is not taken into consideration. Even if you fall apart from these categories and if you fall in this exception group, you might have to pay tax in India. Now the first part was done, that was resident or that was the resident in India. Now we have the ordinary residence. Now ordinary residence means if you are not part of the basic resident, you have to fulfill the part of ordinary resident. Now who will be an ordinary resident? Now to be an ordinary resident, so you have to fulfill both the part. To be the resident, you have to fulfill one of the basic conditions. So if you move to the previous slide, you must see that you have to qualify at least one of the two basic conditions. So here you have to qualify only one condition. Now if you move to the next, here you have to follow the two conditions. Both the conditions are necessary to be an ordinary resident. Now what does the first point says? He has been resident in India at least 2 out of the 10 previous year immediately preceding the relevant previous year. So if the assessment year is 20, if the previous year is 2019, so he must be a resident in India for at least 2 out of 10 previous years. So he must be living in India for at least 2 years, and if not that, so he must be in India for at least 730 days in the 7 years immediately preceding the relevant previous year. So these are the two things. So he have to fulfill both the two things, and if he fulfill both the two conditions, he will become an ordinary resident. Now, one thing we should always know, that it is not essential that the stay should be at the same place. It's not that you live in Delhi for a continuous 2 period. You can live in Delhi, you can live in Mumbai, okay, for any number of time. It is equally not necessary that the stay should be continuous. So this is also one thing, that there must not be a continuous stay also. Similarly, the place or stay of the purpose of the stay is not material. And what is the next point? Where a person is in India only for a part of a day, the calculation of physical presence in India in respect of such broken period should be made on hourly basis. So if such things, if he comes in India in 12 o'clock in the afternoon, so his 24 hours will be only calculated the next 12 hours, 12-hour afternoon. So that will be a 1 day. Not that if he comes to 22nd May 12 p.m. and 12 p.m. will be 1 day. No, that will only be calculated as a half day. So 23rd of May 12 p.m. will be a complete 1 day. So now next, we must be determining the residential status of one half. Now section 6 subsection 2 of the IT Act, what it speaks, the section applies to Hindu undivided family. Okay. Now what is a Hindu undivided family is said to be a resident in India if it control and management of its affairs is wholly or partly situated in India. So if the business management is done wholly or partly in India, so that half will be determined as a residential status. Okay, will be a residential status of India. Now, what are the conditions to be the resident of a half? So he has been a resident in India at least 2 out of 10 previous year immediately preceding the relevant previous year. And next, he has been in India for a period of 730 days or more during 7. So it's generally basically the condition which have been given in an ordinary resident. So the ordinary resident and a Hindu undivided family has to meet these two conditions to be the resident in India. Now there is an illustration to clear out the possibilities, to clear out the doubts. So there is one example given. Suppose X left India for the first time on 20 May 2003. During the financial year 2005 and 6, he came to India once on May 27 for a period of 53 days. Determine the residential status for the assessment year 2006 and 7. So the financial years was 2005 and 6, and the assessment year is 2006 and 7. So the question is whether he is a resident in India or is a non-resident. So what we have to think? We have to think about the basic condition. Now, what the basic condition speak? The basic condition speaks that one have to be present in India for at least 182 days. And now in the case of X, he comes to India only for 53 days. So he does not satisfy any basic condition laid down under section 6 subsection 1. So therefore, he is a non-resident in India for the assessment year 2006 and 7. And since we do not know the previous or the immediate 4 years preceding, no, the data or the information is vague about this previous year's staying in India. So if we see only, if we look into this data, so it is quite clear, since the basic condition is not met, the basic conditions remaining that 182 days, and here he came to India only for 53 days, so he is a non-resident. Next, we have another illustration. So there is another person, even his name is also X, comes to India for the first time on April 16, 2003. During his stay in India up to October 5, 2005. So he comes in April 2003 and he stays for 2005. He stays at Delhi up to April 10, 2005 and thereafter remains in Chennai till departure from India. So one must be very accurate that staying in different places, see, now in this case Delhi and Chennai, doesn't mean that there is any fragmentation or any uncontinuous stay in India. Both are a place or cities in India, so that is just for confusion. So during the previous year 2005-06, X was in India for 188 days. So therefore, now see, in this case he stays from April 6 2003 and stay in India up to October 5 to 2005. He stays up to Delhi to, okay. So now what is this? He is in India for more than 182 days. So he therefore becomes the resident in India. Okay. To determine whether X is ordinary resident or non, one has to test two additional conditions as laid down by section 6 subsection 6. So what are those things? This condition requires that X should be resident in India at least 2 years out of the 10 years preceding the present year. So in this case, he was there. And next, this condition requires X should be in India for at least 730 days today. And even in this, okay. Okay, so in condition 2, this condition requires that X should be in India for at least 730 days during the 7 years immediately preceding the previous year. Now, X is in India from April 16, 2003 to March 31st, 2005. That is 716 days. Okay, X satisfies one of the basic condition and only one of the two additional conditions. X is therefore resident but not ordinary resident in India. Okay. So he's not an ordinary resident, but he's still a resident. Okay. Now, what is the residential status of a firm? So, to be the one partnership firm or an association, if he is to be said the residential status, if we look for his residential status. So, what does section 6 subsection 2 says? A partnership firm and association of person are said to be resident in India if control and management of the affairs are wholly or partly situated within India during the relevant previous year. So, if in the relevant previous year the business affairs were done in India, partly or wholly in India, so he therefore becomes the residential status of India. They are, however, treated as non-resident in India if the control and management of the affairs are wholly situated outside India. So, if none of the business affairs is done in India, or it is done wholly outside India, then he becomes a non-resident. So even the same goes with the company. The residential status of company is also given in section 6 subsection 3, and to become a company will become the residential status only if the business affairs are done wholly or partly in India and he ceases to become the resident of India if the business affairs are conducted outside India, wholly outside India, and therefore he ceases to become the residential status of India. So illustration is given. A Limited is an Indian company. It carries on business in New Delhi and London. The entire control and management of the company is situated outside India. 80% of the total income of the company is from business in London. What is the residential status of A Limited? So here is a company, A Limited. Okay, it carries business both in New Delhi and London. New Delhi is in India and London in UK. So both India and outside, partly it is also situated in outside India, but most of the revenue is generated from the London. So what will be the residential status? Whether it will be a resident in India or will it be a non-resident? Okay, so this is the things. So I would like the viewers to give the answer in the comment box of this video. So there is an illustration given to you and you are required to give answer in the comment section. So what will be the residential status of any other person? As per section 6 subsection 4, every other person is resident in India if control and management of his affairs is wholly or partly situated within India during the relevant previous year. And on the other hand, every other person is non-resident in India if control and management of his affairs is wholly situated outside India. So if some part of the business is done in India, he will be a resident of India, and none part of the business is done in India, then he will cease to become the resident of India. He will be a non-resident. So for other person, for Indian income, it shall be taxable whether the person is resident or non-resident, doesn't matter. So Indian person will be taxable, okay. Foreign income is taxable in India only if it is earned by the resident in India, but not taxable in India if it is earned by a non-resident. So even the foreign person who are staying in India will have to pay tax if it is earned in India, but not taxable in India if it is earned by a non-resident. So if any non-resident and he is not earning any amount of money from India, then he will not be taxed. So there is a small chart to describe it in a very short way. So what is there? Income received or deemed to be received in India, whether earned in India or not elsewhere. So ordinary resident, yes, he has to pay tax. Non-ordinary resident also has to pay tax, and non-resident also has to pay tax. So that means that income received, what does it mean? Income received or deemed to be received. Deemed to be received means some part of the work has been done, but you haven't got the salary till now, but it is deemed that you will get or you will receive the salary after a certain period of time. So if such income is being generated in India, all the three, that is the ordinary resident, non-ordinary resident, and the non-resident, the three of them has to pay tax. Now, income accrues or arise or is demand to occur or arise in India, whether received in India or elsewhere, all the three has to pay tax. Now, income which occurs or arise outside India and received outside India from a business control from India, ordinary resident has to pay tax, non-ordinary resident also has to pay tax, but non-resident doesn't have to pay any tax. Now, income which occurs or arise outside India from any other source, ordinary resident has to pay tax, non-ordinary residents doesn't have to pay tax, and non-residents doesn't have to pay tax. Now, income which occurs or arises outside India and received outside India during the years preceding the previous years and remitted India during the previous year. So no one has to pay tax. So any income which is not all total generated in India and is even not received in India, and none of them has to pay tax. So with this, I would like to conclude today's meeting. I hope you enjoyed this video. Please do comment, like, and subscribe.